Okay, so I'm going to go over just a couple things here and suggest um, just a little bit of patience, maybe another day or two. Um, the dollar, as you can see here, the dollar was down pretty good today, and with that um, in mind, I just don't see any reasonable expectation for gold to be down heavily today. I think we should have gotten our follow through that we were looking for. So I'm going to suggest one of two things is happening, and I'll tell you which one I think it is. We've either got a big bank that's still heavily short, and they're going to try again to punch through this support zone right here at 1275 and trigger a bloodbath phase. And if they do, then gold's going to come down and it's going to probably break this intermediate trend line. Um, most of the time, that's how intermediate cycles bottom. The banks will do this so that they can get a selling panic, and then they can enter multi-billion-dollar positions at the bottom, and they can cover the shorts at the bottom. So most of the time, 95% of the time, that happens. I'm willing to keep an open mind that maybe that doesn't happen this time because we've got this cup and handle pattern playing out. But the down day today with the dollar down, big warning sign for me. Miners down, we're down pretty heavily. Um, so some red flags. The other thing that's possibly happening, and I tend to think this is the right call, is that I think that this is a bottom. The banks recognize this as a bottom, and they want to add some more positions before this takes off to the upside. So they manufacture this up day today, and they knock the miners down pretty heavily today, and um, and it won't take much tomorrow to break this intermediate trend line. So I tend to think that's what happened. That that I think this is kind of another little wrinkle that's developing in how the big money, the big banks get into positions. One of them, and they've been using it for quite some time, is this, these undercuts, and then they buy into the selling panic when they trigger the stops. But I think we've got a new bottoming tactic that's developing now, in that they'll manufacture like a big scary down day very quickly coming out of the bottom, and that knocks the weak longs out of their position, allowing the banks to scoop up some more shares. I think this is what happened today, but I'm not confident enough in it that I'm willing to hold on to uh, my shares. Um, as of today, there's without a crystal ball, I don't know which scenario is the correct one. It could be either one. We could wake up in the morning, there could be another big attack, and gold is back down below 1275, and we're starting that 5 to 7 day bloodbath phase. Or tomorrow we could wake up and gold has completely recovered all of today's losses. And if that were to happen, then I would say we have confirmation that this is exactly what happened today. This was a manufactured attack to squeeze some nervous longs out of their shares and allow the banks to scoop up, a little bit larger position. It's just that, there are no tools to tell us which one of those scenarios is the correct one. I'm leaning a little bit more in favor of this being just a manufactured attack to allow the banks to scoop up some shares, but I'm not willing to risk getting caught in a bloodbath phase if in the morning we wake up and and they've beaten gold back down, and especially if it's back below this 1280 support zone right here. I'm not willing to uh, roll the dice, so to speak, and hope that I'm right, that that this was just a manufactured attack that's going to be reversed immediately tomorrow. I'm going to have to wait and see if it's reversed tomorrow before I can go back in. And realistically, missing this little piece here, waiting for confirmation, isn't the end of the world. I think this next intermediate cycle is going to go well above $1,400. So I don't think we have to blindly choose a side today. We can wait. If a bloodbath phase does develop, then we know what to look for in the bottom. We know they last 5 to 7 days. We know there's usually a big capitulation day or two at the end, and then many times a very heavy volume up day. And if that is the case, then we could potentially get in down here somewhere, maybe down in the 1250 to 1240 zone if gold breaks this intermediate trend line. So, and if not, if tomorrow and Wednesday we get a recovery of today's move, then I think at that point we have confirmation that is exactly what happened. That the banks just manufactured a sneaky attack to allow them to knock a few people out of their shares, and they managed to pad their positions a little more. But without inside information, we don't know which it is. So we're kind of at a disadvantage. We've got to wait and see which one it is. We can't. There's no tool that I know of that'll tell us just by looking at this chart as to which way this is going to go. It's not going to kill us to wait another day, and maybe we wait till the FOMC meeting. That's obviously a trigger event. And we could even wait till the end of the week. If you want to be really safe, you could just wait until we get a weekly swing. And obviously we don't have that yet. And in fact, we're kind of reversing this bullish candlestick, at least today anyway. And in the minors, it's even kind of uglier looking. We basically today we've erased all of that long tail. So, not what I wanted to see on Monday. And that being the case, I think discretion is the better part of valor. I don't think there's any need that one has to close their eyes and choose a direction right here today. I think we can wait a day or two and see if we can't get some follow through one way or the other. And at that point, I think we can make our decision as to whether or not we stay on the sidelines for another week, or whether we just accept or get confirmation that this was just an attack, and that it's okay. We can go back in. But as of today, there's nothing in the chart today that I can say will give us an edge in choosing one way or another. Today, you're basically, it's just a coin flip, unless you happen to work at one of the banks and which way they are going to try and go with this. And I doubt that any of us do. So we don't have the crystal ball that we're going to need to make this decision. So I think we're going to have to wait for some confirmation, and then try and decide at that point whether we should go back in or wait another 5 to 7 days. All right, and then finally, I want to address the nonsense that went on this morning. Apparently, the point the subscriber was trying to make is that I said that in order to make big money, you had to be willing to hold through large drawdowns, and that is the case. But it doesn't mean that you have to willingly hold through a large drawdown if you know the risk is great of it coming. Clearly, what I mean by that is that the system I use, cycles and sentiment, will occasionally get caught uh, by an unusual cycle. So, for instance, let's say we get, let's just say we get a bloodbath phase and we get 5 to 7 days down, and we get, like a heavy volume day, and at that point we're 40 days or 40 plus days into the cycle. And at that point, we think it's, we've got enough confirmations that we should be close enough to the bottom that we can go ahead and enter positions and be within a day or two of the bottom. Well, 95% of the time, that would work. We would be very close to the bottom, and at that point, there wouldn't really be any need to stop out. Your entry should be close enough, but um, it's possible that we get a curveball in that situation, and we get a bloodbath phase that doesn't last 5 to 7 days, maybe it lasts 15 days. And so we end up taking a big drawdown, even though we played everything by the book, exactly as we should have, based on the rules of the system that I use. The strategies based off of cycles and sentiment. Cycles tell us that after 5 to 7 days, we should be safe entering. But if we get a weird curveball or a really weird stretch cycle, and the bloodbath phase lasts much longer than we would expect it to under normal conditions, well, then we end up taking a big drawdown, because at that point you really shouldn't stop out, because 95% of the time a stop out will just cause you to get whipsawed. So in that instance, the correct move would be to take your position and hold it. And every once in a while that will be the wrong move, because the cycle will stretch longer than we anticipate, and we end up taking a much bigger drawdown than we would like, simply because we just got thrown a curveball that we couldn't foresee. Kind of similar to the fifth daily cycle in the stock market last year. That's what I mean by having to weather large drawdowns. Sometimes that happens. This is not the case right now, though. We're clearly in the timing band for a low, and we've got some of the confirmations. We've got a move below the 10-week moving average. We've got the weekly stochastics oversold. The 10-week moving average is turned down, but we're still missing a couple. We haven't broken the trend lines, and we haven't had any big volume capitulation days. And so there is risk that we might still have a bloodbath phase ahead of us, and there's no reason that we have to weather that. If we can avoid it, that would be much better. And if we could avoid it and also get in at the bottom, then we're going to make a heck of a lot more money on the on the next intermediate rally. And also, if you can avoid it, you have a lot less chance of panicking and selling at the bottom of it. So, this person wanted to read into what I said what he wanted to hear rather than what I said. We don't have to take big drawdowns when the risk is high that a big drawdown could come. And right now it is. We haven't seen a bloodbath phase yet, and maybe we won't get one because we are in this cup and handle pattern. But the risk is there that this could be, like 95% of the other intermediate cycle lows, and we do get some kind of a bloodbath phase that breaks this intermediate trend line. So it doesn't make sense to just hang on to long positions and hope that we're right, and take no precaution at all against a potential bloodbath phase when there could be risk of one this week. I think we should just wait a little bit. Let's just wait a day or two. Maybe we wait to the FOMC meeting. at this point, I think I'm going to need to see this reversed. Um, at least in gold. I think I'm going to want to see today's big candlestick completely reversed. And if it is, then I think at that point I would be confident that, that this was a manufactured move to scare people out of their shares and allow the banks to scoop up some more um, shares before the market starts to head higher in earnest. But until I see that, I'm going to be nervous that this is an attack to try and initiate, or another attack to try and initiate a bloodbath phase again. So, I've got to basically, I've just got to stay on the sidelines. And I got to see one of those two things happen. I either got to see a complete reversal of today's sell-off, or I got to see a bloodbath phase. And if I do, then I'll try and pick a bottom, maybe at the end of the week or the beginning of next week.